Welcome to the definitive guide on building a business credit card strategy for beginners in the year 2026. This is not just about getting a piece of plastic to pay for your coffee. It is about constructing a financial fortress that allows your business to scale, protects your personal assets, and unlocks travel rewards that can literally change your lifestyle. If you are just starting out, the world of business credit can seem intimidating with all its acronyms and rules like 524 or personal guarantees. But by the end of this audio, you will have a crystal clear step-by-step roadmap to navigate this landscape. The first and most critical step before you even look at a credit card application is to legitimize your business foundation. In 2026, banks are stricter than ever about verification, so you cannot just be a ghost with a social security number. You need to form a proper legal entity, which usually means filing for a limited liability company or LLC in your state. Once you have your articles of organization, you must obtain an employer identification number or EIN from the IRS. This 9-digit number is effectively the social security number for your business, and it is essential for building a credit profile that is distinct from your personal identity. Next, you must open a dedicated business checking account. Do not mix your business revenue with your personal checking account, because this is a red flag for lenders and it makes your bookkeeping a nightmare. Having a business checking account with a reputable bank not only makes you look professional, but it also helps build a relationship that can lead to easier credit approvals down the road. Now that your foundation is set, let us talk about your personal credit score. Because for beginners, this is the key that unlocks the door. Even though we are applying for business cards, the vast majority of entry-level business cards will require personal guarantee. This means the bank will check your personal credit history to decide if you are trustworthy. You generally need a personal credit score of at least 608 to get approved for standard cards. But if you want the best cards with high limits and 0% interest offers, you should aim for a score of 720 or higher. You also need to ensure that your personal credit utilization is low, ideally under 10%. Because if you are maxed out on your personal cards, banks will see you as a high-risk borrower and deny your business application. Once your personal credit is ready, it is time to execute the strategy, and the first rule of business credit in 2026 is the same as it has been for years, which is start with Chase. Chase has a strict rule known as 524, which states that they will automatically deny you for any card if you have opened 5 or more personal credit cards from any bank in the last 24 months. This rule is absolute, and there is no way around it. However, business credit cards from most issuers, including Chase itself, do not count towards this 5-card limit. This is why you must apply for Chase business cards first before you fill up your 5 slots with other cards. The Chase Ink family of cards is the gold standard for beginners, specifically the Ink Business Unlimited and the Ink Business Cash. These cards often come with massive sign-up bonuses that can be worth nearly $1,000 in cash back or even more if used for travel, and they typically offer a 12-month period of 0% interest on purchases. This 0% period is a powerful tool for a new business because it allows you to buy inventory, laptops, or software upfront and pay it off slowly over a year without accruing any interest, effectively giving you a free loan to jumpstart your operations. After you have secured 1 or 2 Chase cards and established that relationship, you should look at American Express. Amex is incredibly friendly to small business owners, and they have a unique feature that is perfect for protecting your credit score. Once you are already a customer with an Amex personal card or business card, they will often approve you for new cards with a soft pull, meaning it does not result in a hard inquiry on your credit report. This allows you to expand your available credit without damaging your score. The Amex Blue Business Plus is a staple for every beginner because it earns 2 points on every dollar spent on all purchases, up to $50,000 a year, making it the perfect catch-all card for expenses that do not fall into bonus categories. Additionally, Amex offers charge cards like the Business Gold and Business Platinum, which do not have a preset spending limit. These are powerful for businesses with high ad spend or high inventory costs. But remember that charge cards must be paid in full every month, so only get these if you have the cash flow to support them. The third major player to consider in your beginner strategy is Bank of America, especially if you have significant capital deposit. Bank of America has a preferred rewards program that gives you bonus rewards on your credit cards if you keep a certain amount of money in their business checking accounts. For example, if you keep large cash reserves for your business, moving them to Bank of America could boost your credit card rewards by up to 75%, which is a massive return on money that would otherwise just be sitting there. Now let us talk about a crucial concept called credit utilization hiding. One of the biggest benefits of business credit cards is that most of them do not report your balance to your personal credit report. This means you can have a business credit card with a $20,000 limit, and you can max it out to $20,000 to buy inventory, and your personal credit score will not drop a single point. This is because the debt sits on your business credit report, which is separate. However, there are exceptions to this rule. Capital One and Discover are known for reporting business card activity to your personal credit report. So as a beginner, you might want to avoid Capital One business cards in the early stages, unless you plan to pay them off in full every month. Otherwise, a high balance on a Capital One Spark card could tank your personal credit score, which would hurt your ability to get a mortgage or a car loan. As you build your stack of cards, you need to be organized. Use a spreadsheet to track your payment due dates, your statement closing dates, and your annual fees. Missing a payment on a business card is disastrous because, while positive usage does not always help your personal score, a delinquency or default will almost always be reported to your personal credit, causing massive damage. Also, keep track of your sign-up bonuses. These bonuses are the fastest way to accumulate value. For example, if a card offers 8,000 points after you spend $5,000 in 3 months, you need to make sure you hit that spend requirement. Do not open a card if you cannot naturally meet the spend requirement with your normal business expenses, manufacturing spend, or buying things you do not need just to get a bonus is a trap that leads to debt. Another advanced tip for beginners in 2026 is to look for cards that offer specific category multipliers that match your business. If you are an e-commerce business spending heavily on shipping and social media ads, the Chase Ink Business Preferred is a must-have because it earns 3 points per dollar on those categories. If you drive a lot for your business, look for cards with gas station multipliers. Matching your card to your spending habits is how you maximize your return on investment. Eventually, as your business grows and generates consistent revenue, you will want to graduate from these personal guarantee cards to corporate cards that rely solely on your business performance. Companies like Ramp and Bricks offer cards that do not require a personal guarantee and have limited